Hello, everybody. So I want to make a quick update on StoneCo, aka STNE. So StoneCo's up 16% over 2 days, and I see a lot of people getting all excited on Twitter and very happy. And I guess I'm happy too. Look at the chart. Look at the charts. It's up 16%. You can see, right? You can tell. And I'm using that chart to really say that it really doesn't matter. I mean, it could be up 100% as far as I'm concerned. That wouldn't even make a dent as to how long I'm planning to hold this stock. I mean, to me, this is a stock that should be trading over the long run, say by 2030, much closer to the $100 range circa over there, right? Not this cheap. And that is based on the fact that this stock is actually still the cheapest stock in my coverage universe by a long shot. Look at Square. When I use my favorite metric valuation, which is enterprise value over 12 months gross profit over revenue growth, StoneCo is about 10 times cheaper than Square, even though they have somewhat similar businesses, right? Of course, Square is in the US, much bigger economy, but nonetheless, I happen to believe Square is cheap. So if I believe Square is cheap, and I see this in StoneCo, I cannot believe this market, really. StoneCo is the cheapest stock in my coverage universe, and this has to do with the fact that this stock crashed before the market madness, before the tightening. This stock crashed because of an idiosyncratic reason. They made a mistake in their collateral system on their app. They had the wrong collateral, and thus the stock crashed much before the rest of the market. And it's been ignored. It's been ignored ever since, even though they've solved the one little issue that they've had. You can see this market isn't forgiving. You have one issue and you get dropped to a 10x, right? Your stock goes from $90 to $10. That entirely makes sense. Yes, no, it does not. And by the way, if this is your first time on the channel, StoneCo it's about 85-ish% financial services, which is mostly digital payments in Brazil for stores, so the same as the Square terminals. And they also have kind of a QuickBooks for small business, which is their software business, which is a business that they have yet to pour money into marketing to grow that business. But right now, Mr. Market wants nothing to do with growing and marketing. So anyways, let me go quickly over this company. Why I love this company? Well, on this channel, I focus on hyper growth stocks. And when I look at Costco, of course, we've had great year-over-year growth of 44.5%. That's amazing. My threshold is typically 30% is what I look at. But you've seen a tiny deceleration, and this deceleration is because they've stopped doing many investments in marketing. This is unfortunate, because when a company like StoneCo invests in marketing, when they gain a merchant, that merchant's going to stay for a decade. But nonetheless, they've taken a slowdown in the marketing, given that the stock got literally divided by 10. But even if you take that current slowdown, you can see that StoneCo, these are my expectations for 2023, assuming that they keep declining quarter over quarter in their growth, I'm still expecting a 33% forward growth for the full year of 2023. And actually, gross margins are going up, which is fascinating. This is the history of a gross margin. They went in a matter of 5 quarters from 66% to 74% gross margin. So this is a company that is making more and more money, and that is still growing at a very hyper growth pace, which is why this valuation, right, at 3x enterprise value over gross profit, or 1.97 times enterprise value over forward gross profit, this to me makes absolutely no sense, because this company, as the criteria, is growing as fast as just about any SaaS stock out there, any hyper-growth SaaS stock, this company is growing as fast. Yet it is trading like a deep value stock, right? So what? Right? It's 33% revenue growth, 75% gross margin. You may say, I have plenty of stocks like that on the channel. And it's true, I have a lot of stocks like that on the channel. But none of them are trading at 1.8 times sales for a 74% gross margin. None of them are trading at only 1.35 times next year's sales. None of them are trading at, a 4.8 times free cash flow. This type of free cash flow yield you typically see in like a depressed company, or like a natural gas pipeline in West Virginia. That's typically the type of business, or an oil tanker company. That's the type of business you have to see to find this type of free cash flow yield. This is a very, very inexpensive stock. And even if you look at PE, which, as you know, on this channel, I don't focus at PE because PEs make no sense for hyper growth companies. But nonetheless, even if you look at PE, it looks cheap on a PE basis at a 16. That's what makes Stone unique. How cheap it is. How forgotten it is by the market. Let me show you this chart again. You can really see a 16% up. That really made a dent in the stock price, didn't it? So this stock is that special and that unique, that it is so unique that it unites the king of value and the queen of growth, which I think the only other stock that unites both of them is Nubank. Nubank is the other one that they both own, which is a stock I also own and I've covered on the channel, which is also a Brazilian stock, which this time is a neobank. So they are only united on both stocks. And so you see Cathie Wood owns a casual $25 million of StoneCo through her funds, and Warren Buffett he owns a big chunk of StoneCo. He was a very early investor. So it's rare to see investors that are so different agree on one stock. And let me conclude this video by, and I've covered StoneCo on the development channel, so just by reminding ourselves of a few catalysts for StoneCo. So one of them, which frankly I think is very clever, is their partnership with Big Brother Brazil. I've seen a lot of tech companies partner with a lot of old media lately, and that's likely because it becomes cheap, right? It's as a lot of entertainment, as a lot of advertising money moves online, this kind of traditional media advertising actually becomes compelling, right? It's a pattern we see in HIMSS too. HIMSS has also found, if you follow the channel, HIMSS stock is a healthcare stock that I'm very big on in the channel. HIMSS, same thing. They do traditional advertising. So there's this kind of a counter trend that's going on. I think that's very interesting. But they are partner with Big Brother Brazil, BBB, and it's actually one of the most popular shows in the world. Actually, they have followers around the world, but just in Brazil alone, that's 40 million nightly viewers that see this show, right? 50% of the TV audience of all of Brazil tunes into this show in that time slot, 100 episodes per season, and that's on the main channel in Brazil. So this is very interesting to me, because the products, right? This is the cash bank, the terminal. It's featured in that show, throughout that show, and so you can easily imagine 40 million people every night this spring are bombarded with StoneCo ads, with a StoneCo advertising, which I think is very, very clever. And this was one of the things that they were extremely excited on the call about. They were extremely excited. They even have a song. They even made a song for StoneCo. And if you go to this YouTube link, you can listen to a song. They made a song for StoneCo. So, anyways, what else? What else is good? Well, the Brazilian economy has actually, objectively, if you look at it, they've been doing a better job at fighting inflation than in the U.S. And so I wonder how much oil plays into that, because Brazilian, they have Petrobras, and they have a lot of oil and things like that. So I don't know exactly the idiosyncrasies as to why they've been so successful, but they've been fairly successful at decreasing inflation, which means that the market is anticipating for a lot of the Brazilian economy to have a recovery actually sooner than the U.S. And that's because they tightened much harder and much quicker than the US, in my view. And the last positive that I see for a stock like StoneCo is the currency. Their currency is actually strengthening. It's taken about 6% in 2 weeks compared to the US dollar, and we'll see what's going to happen. But I do believe that, like, if you look at the long-term currency trend, it's clear that the Brazilian real has been on an uptrend for about 2 years vis-a-vis the US dollar. That was prior to a major drop. So keep in mind when you invest in a foreign country, right? Currency movements matter, and I think if you own the stock in US dollar, I think there could be a positive impact here. So I'm also excited about that. Anyways, this was a very short update on StoneCo. Not investment advice, just entertainment. Appreciate your likes and your subscribes. Have a wonderful day.